With market conditions remaining volatile, what role can Asian equities play? Let's find out. Today we have with us Ronald Chan. Welcome, Ronald. How could US rate movements affect Asian equities in 2024?
We believe the US federal fund rates have almost reached its peak. If the US economy experiences a soft landing, growth at a slower pace, we expect the US Federal Reserve to gradually start cutting interest rates in the second half of 2024. Notably, we have seen a cumulative increase in the US Treasury bond yields throughout 2023, such as the 10-year Treasury. If bond yields follow the US rate cuts and fall, then the US dollar should also soften. This may have a positive impact on Asian equities.
How attractive are Asian markets from valuation, risk-return, and investment theme perspectives? How do you plan your geographical allocation?
Currently, international investors remain underweight in Asian equities. Since the beginning of 2023, Asia's overall stock market have been broadly flat. However, the market is now attractively valued, with a 2024 forward PE ratio of approximately 12 times, which is below its 10 years historical average. In particular, Hong Kong and Chinese equities are trading at only about 8 times and 10 times forward PE, respectively. Compared to the US equities, which is around 19 times forward PE, Asian equities valuations are much cheaper. From a risk-reward perspective, we favor ASEAN and Chinese equities. Even if US-China relationship further improve, we believe that multinational companies will continue to adopt the China Plus One strategy to diversify its production plants from China to other ASEAN markets, a trend that we believe will become more obvious in 2024. Across the ASEAN markets, we are more positive towards Indonesia and Malaysia, which have better manufacturing capabilities, and the Philippines, given its relatively cheap valuation.
What is your view on China's economic outlook? What are the investment themes for China and Hong Kong equities in 2024?
The strength of China's economic recovery following the country's reopening have been weaker than expected. Against a backdrop of a higher saving rate and ongoing adjustments to the property market, we have seen a policy shift. Fiscal policy have switched from the local governments to central leadership. Recently, there have been progressive moves involving trillions of renminbi to support the economy, the property market, and the private enterprises. These policies may help ease market concerns about property market and the economy. After a year of destocking by mainland companies, product inventories have been reduced. When investors see more policy support and implementation measures, this should drive investment and market demand, which will potentially help corporate earnings regain growth momentum in 2024. In 2024, we are looking at 3 investment themes. The first is innovation, which includes new energy vehicles. We believe leading car companies have quality and cost control capabilities, leveraging advanced driver assistance systems to improve autonomous functions so their products can be exported to overseas market. In addition, we favor the biotechnology and medical equipment sectors, especially the contract research organization entrusted by large pharmaceutical companies to conduct pharmaceutical research and developments. The second is tourism consumption. Once the US dollar peaks, the renminbi could strengthen, increasing Manila's overseas purchasing power. We are more positive about service consumption than commodity consumption, namely Macau gaming companies and online travel agencies. The third is enterprise going overseas. Given supply chain dispersion, Chinese firms are increasing their global investments and benefiting from the outward direct investment, which is resulting in more growth opportunities.
Ronald, thank you for your insights. The medium and long-term outlook for Asian equities remains positive, and we believe that staying invested is the right course to achieve steady and long-term growth for your portfolio. Thank you for watching.